Welcome back to another episode of Collective Shift. We have our superstar on-chain analyst Checkmate joining us for our monthly update, which we did pause, but by popular demand, it's back, mate. And the members have been loving your content, so I thought we'd do a YouTube video so everyone else get a taste of your analysis. How you been, man? Good to be back in Oz.
Good, mate. Yeah, no, we were talking just before, it's a game of survival at the moment, but kind of watching the forest fire burn through, and I'm getting into the hopeful camp where it looks more like embers now than a raging inferno, but, we will see how it plays out over the coming weeks.
I was listening to data recording. I was listening to SBF on the New York Times this morning, man, and it was the flames were raging inside, man. It's been a tough few weeks for. I feel sad for just people that normies that try in this space and continue to just get obliterated by us.
Totally.
So
no, it's really disappointing, and this was the first time I've seen OGs in this space actually just come out, and I think that the correct emotion is just absolute disappointment and disgust. You see these grifters, and the problem is that they were grifters with leverage and with leverage with other people's money. So it really was that really malicious element of harming others that I think was what was so horrible about this particular scenario. If you compare it to Mount Gox was really, it was pretty bad, but it was incompetence in many regards, and also just the technology was so early that it's still bad, but you can kind of see why it happened.
Yeah.
This was just straight fraud, and I think that's what makes it so painful for the industry to watch, especially given the limelight it was all in.
And the contagion, right? So BlockFi this week, they've gone filed for bankruptcy. 100,000 customers. That is insane, right? And then you think of all the scam. I saw $3 billion in scams from DeFi hacks and whatnot this year. The market, it's just been an absolutely brutal year. But anyway, that's enough negativity, mate. Give us some light. Give us some embers. What are you looking at? We've had a pump overnight, man. Give us some hope.
Yeah, it's a bit like that, isn't it? And it's one of those things, right? So it's there is no answer to when is the bottom, right? The answer to when is the bottom is in 12 months' time we look back and go, well, it turns out that was the bottom. Yeah, that's kind of the nature of the beast, right? So you don't know, and this is the same in any market. What we try and look for is confluence and probabilities. So the way I like to frame it, and particularly with on-chain, where I spend my time in, what we're looking at really is it's the human psychology. And if you think about it, market cycles are different, the SBFs are different, the exchanges are different, the regulations are different. But there's one thing through all market cycles and all assets, right? The reason that you can chart the 1920s and plot the Great Depression, and it looks like a technical analysis pattern, and you can then have the Wall Street cheat sheet, is because human behavior and the human response to fear and greed is always the same. So what we're doing with on-chain analysis is there's two things. You're obviously looking at network fundamentals, but what we're looking at is the collective behavior of all Bitcoin users. So baked within that, and there's all this stuff about, oh look, the Fed's semi-pivoting and all that kind of thing. It's yeah, well, guess what? That's all been baked into human behavior in the way that they react to Bitcoin over the last 6 months, right? So it's kind of like price in that regard, that it bakes all the human behavior into one thing. So when we're looking for market bottoms, the way that I like to frame it is from a psychological perspective. When did we see conditions that were so dire and so just absolutely hopeless in the past that it expelled any and all people who were going to sell, right? What is the human tolerance for pain in a Bitcoin market? And when we look across, whether it's price, when we're down at 75 or 78%, whatever it is from the top, that's now in the ballpark. When we look at duration, we've been in this bear market about as long. Pretty much we always bottom. And actually, because I measure the bear market from May 2021, a lot of people do it from the all-time high in November, the duration's actually been longer. But obviously we had that scam pump in the middle. So duration's there, price down is there. The network profitability is pretty much the worst I've ever seen it. So we've got all of the conditions in play for, in the past, those very same human beings, they're different people, but they act the same. This much pain has been enough to put a bottom in. So at the very least, when we look at historical regimes, we've got enough data to say it damn well looks like it, right? Dotting the I's, crossing the T's on what could be a bottom.
Okay, brilliant. What these sort of into I don't know what you call them, short-term little pumps like overnight. I saw, what are we at the moment? Just ticked over 17,000 USD. Are these just sort of natural market movements? Is there anything really fundamental behind them? Is it just, I know we had some good, rates come in the other day when Australia, especially with inflation sort of starting to come down. Has that got anything to do with it? Is there anything really to worry about?
Yeah, no, I do think that's actually the primary thing. I think the markets are forward looking, and BTC just happens to be one of the most liquid free assets in the world. So, and by liquid, I mean that it's obviously much smaller than many assets, but a lot of people don't realize or contemplate this, but I can't remember the exact year. I think it's 2024, but because the S&P 500 is closed on weekends and afternoons, if you model out how many hours Bitcoin has been trading for, I think by 2024 it will surpass the S&P 500. And I think, don't quote me on this, it was something like 2027, it will surpass the Dow Jones, which is the longest trading asset of all time. Oh. So in terms of the liquidity, it's spread over a much longer time frame. You've got Bitcoin liquidity in every single country, in every fiat currency. So Bitcoin has a unique ability to respond to the entire world's information. So I think this recent rally is a combination of two things. One, I believe that we're extraordinarily oversold. So when, a lot of people we broke down to 15.5K. Yes, during a Mount Gox moment. You know what I mean? Like we went from 17.5 to 15.5, which, it's not up, but it's not exactly 12, right? During a moment that really should be, people are saying it's industry ending. So if it's industry ending, we're trading mighty high for an industry ending event. So then you get any kind of relief from the Fed, right? The Fed said, I didn't want, again, I'm off the Fed watching. I think it's just the most boring pastime of all time. But my understanding of it is it wasn't as hawkish as previously, which everyone's like, hey, look, pivot. Now, I'm not on the camera. I'm expecting them to just kind of reverse course and next thing will be cutting rates. But I'm also aware that the economic data looks pretty horrendous in a lot of areas and somehow it's booming in others, right? I think that's like the Christmas boom. I think people have post-lockdown, they just want to spend, but that's going to come to an end, right? Because there won't be the money, job losses will start hitting, all that will happen. So the big question upcoming is the recession going to happen? And I saw a great tweet about this. Someone was like, every single person predicts a recession. And you know what it's like when everyone predicts something, it's not going to happen. And then someone just came back with a really great tweet. It's like, everyone also expects the sun to rise tomorrow. Doesn't mean it's not going to happen. You know what I mean? Like you just kind of look at the reality of the situation. So how does Bitcoin respond? And then how does the Fed respond in that whole mix up? So I'm not in the camp of all-time high anytime soon. I think 2023 is going to be a very slow 2019 style grind. We'll get some nice rips. We'll probably then get some long 6-month long sideways to down. But I do think we're probably back on the path higher, but it's going to take a long time to get there. Yeah, no, I feel you. Do you think there's any other risk in terms of contagion from FTX? I know Genesis was I haven't kept up with that recently. There was talks of Grayscale. I feel as though when these events happen, everyone just thinks the worst case scenario. I don't know if that's actually going to play out. But if someone like a Genesis was to actually blow up and, had contagion down a Grayscale, would you expect prices to go considerably, downwards? Or do you think back to the Mt. Gox idea of FTX, is that possibly we've seen the worst possible thing that could possibly happen to crypto, apart from Binance perhaps or Coinbase blowing up? Yeah, no, and I think that's the way to frame this is that there's risks that the market, and this is a good concept. Markets like certainty, even if it's bad certainty, even if it's bad news, as long as they know about it, we're good. So Genesis, I would believe, is currently relatively known information. When we started hearing ruminations of it all, and Genesis is a big entity, so is DCG. And that last I saw, they were trying to sell CoinDesk just to cover their costs. It's a big problem. But we didn't really trade down at all. So I think that's now priced in information. So in terms of the stuff that we're aware about, my view is that most of the lenders who are going to blew up back in June. FTX is actually the back end of that because they kind of stepped in and saved them, but they were actually insolvent themselves. So I think most of the known damage is pretty much done and priced in. The tail risks that I think still exist, there's a couple of them. The giant behemoths, the ones that would just be remarkably bad and there's no idea where it would go, would be a Coinbase, which I think is very, very unlikely.
Yeah,
A
me too.
Coinbase, a Binance, which I also think is very unlikely. A Tether, which I also think is unlikely in the short term.
Yeah.
Longer term, I think Tether's still in trouble. And the other one that's quite scary is Silvergate. Now, that's probably the one that has the highest level of risk. For any of you who kind of follow, there's a very good short seller called Mark Cahodas out there. Twitter handle is Alderlane Eggs. Now, he can also get a little bit over the top on things, but he was very early on talking about FTX. He's now going after Silvergate because they had a whole lot of banking relationships with them. Now, I don't have a great deal of inside baseball on that. I know that Silvergate banks many exchanges in this industry. It would be very, very bad if anything happened to Silvergate. I don't have a gauge on what the probability is, but my gut feel tells me it's probably, as a regulated banking partner, if American regulations do what they say they do, I think it'd be hard for them to really botch it that much.
Yeah.
So that's one to pay attention to. Mark Hodis is all over it, but as I said, he can get a little bit over the top, and I think he's gunning for it. Maybe because he wants more FTX fire. You know what I mean? Like he started the FTX fire. Exactly. He's like, I want to see the fire burn because I've started this thing.
Yeah. Okay. Cool, man. We've sort of given a bit of context to listeners what's going on in the last few months. Is there anything on chain you want to show us? Anything that you think might be interesting, just to maybe give the viewers maybe a think about where we're headed over Christmas and New Year.
For sure. So some of you have probably seen me use this dashboard before, and I mentioned before it's about confluence, right? When do we see the market basically fully? In fact, I'll go back to the parent one. When do we see the market reach that point of just absolute, it's over, right? Complete pain. What did it require to flush everyone out? So this is a dashboard I've been playing around with and working on. What it looks at is 8 different types of metrics. You'll see down the bottom here, there's different color traces. Green is pricing models. Yellow is on-chain activity, so how much momentum is going on chain. Blue is then profitability, and purple then supply. So are we seeing a net transfer? Are the old hands basically transferring back, right? The old hands see strength, they move out of accumulation phase, they start transferring their wealth, and demand is thus coming in. So as you can see, during bear markets, this thing basically none of these things light up, and it's a pretty barren wasteland. During bull markets, the price chart will light up, which is saying that we had 5 out of 8 or 8 out of 8 when it goes dark purple. So as you can see, where we currently are, it's a barren wasteland, right? So we are still in bear market territory. And something I've been talking about lately is you can be patient, right? We're not gunning for all-time high, at least in my view, anytime soon. There's no rush. You can basically just be stable, make sure you don't have to rush into this thing. There's time on your side. Now, with that said, generally speaking, and you can see back here in 2015, these orange bars really start to pick up. They're the first ones. So what that generally means is that on-chain activity, people coming into the network, there's the final washout, people start capitulating, but also people go, hang on a second, all right, this is value. And you see the network start to come back to life. It's a slow process, but it starts to rejuvenate. So you can see here we've got a little bit of an uptick on this black curve, and that is primarily driven by the on-chain activity side. So the way to think about that is we've got the first early signs. That doesn't mean that we don't have months of pain ahead of us and sideways and boredom and maybe even another leg down, but it means that it's time to start paying more attention, right? The probability is starting to shift back towards we may have a bit more strength. What we generally then see, I'll jump across to our actual parent dashboard here. If you're looking for something to just like, my trading mentor told me there's no prize for picking the bottom, right? No one sends you a trophy. There's no like accolade, or you don't get your name on a board anywhere. Sure, you may get a better entry, but you're also probably going to take a few punches along the way. So in terms of just waiting for that like strong confirmation, what you can see back here in 2018, this is two models. The realized price in orange and the 200-day moving average in blue. And towards late stage bears, these two start to converge because the realized price tends to trade sideways and the 200-day moving average, which is a bit of a proxy for durational pain, right? The amount of time it takes the 200-day to get right down here is that time pain, and also we've been down there long enough for it to come down. And as you can see, we're approaching an intersection. So they're currently realized price is 20,000 or 20,200, 200 days at 22. So if you're looking for something to just give you like I don't care about picking the bottom, I just want to wait for strong movement to the upside. Once you're getting up above 20K and holding it, that starts to feel a little bit more like we've got our price signals back in the market. Once price is above the 200-day, institutions who are looking for just a bull bear switch, all of these things start to come into play. So if you're looking for like a safe signal, wait for the pricing models, get above the 200-day moving average realized price. That's a nice little starting point.
It's a fascinating thing around any market, around human psychology. And back to your point at the start of this episode, it's like when you really boil down to it, I remember the 2018 crypto winter, like at peak fear, it was just a bloodbath. It was like this.
It was going to 1K.
No, it was going to zero, man. It was all over. Like wrap it up. Like throw your ledger out. Like we're done and dusted.
That was the era where they were doing Elliott waves, like multi-decade Elliott waves that just showed it has to go down to $1,000 to reset. And it's like, come on.
I remember that YouTuber. What's his name? He had his own theory that it had the super. I don't know what it was, but it had to basically go to like
something. It was some magic wave of some form there.
Had hundreds of thousands of subscribers. It was the Bible, mate. Completely wrong. And it just goes back to human psychology. It's like at the absolute, peak moment of fear in the market, and that the 200-day moving average is actually, I like that proxy idea of like you're actually just getting a sense of like that emotion of just people getting drawn out of like slow declining prices, giving out, people giving in the towel, like throwing in the towel. Mixed with that on-chain and seeing where that's actually diverged in the past and when price increased afterwards is it's an interesting way to look at it.
Totally. So yeah, that's in terms of a safe signal, that's something to certainly be paying attention to. I mentioned before the on-chain activity side. So these are just the components that go into that. So the first one is new addresses, right? And this I love this concept. You'll see me use it all the time. It's called momentum, right? And this is just something that me and my guys at Glassnode named it. But momentum is basically looking at the monthly versus the yearly. And it's a very simple check. Is the monthly higher than the yearly? Because that means you've got a bit of momentum to the upside. Short term is more explosive than the longer term. So you can see here in terms of new addresses, we do have some upside momentum, right? Really for the first time. There was a little bit of a burst as Do Kwon was exploding. But aside from that, it's been pretty barren since, as you can see, this is why I say that the bear market started back here in May 2021. Because that's where we got this crossover, right? You can see that the on-chain activity was dying off, and it really caved in after that and never really recovered. So this is the first proper burst we've had to the upside. Now, new addresses are not the perfect proxy for users, but also if you run this across any of our, clean entity adjusted models and all that stuff, you get pretty much the same result. So, in terms of a free metric, it kind of solves that problem. And the other one on that front is when you've got more activity, you want fee congestion, right? And we're starting to get just the tiniest little burst of fees coming back into the mempool. So what this thing is looking at is a 4-year Z-score, which is basically a statistical deviation. Now, this thing here is just getting back to neutral, right? So it's basically saying that we're at the average amount of fees paid over the last 4 years. So given we've got about a year and a half or almost 2 years now in a bear, 2 years in a bull, it's literally back to neutral. And that's, it's not positive, but it's also not negative. So, we're literally at the point where it's starting to pick up. What we want to see is this actually sustain and get some positive momentum to the upside. And strangely enough, these very simple models, new addresses, transaction counts, and fee momentums, when you do just some very simple checks like momentum or Z scores, it's amazing how high signal these things are at just determining regime shifts. So again, something to just be paying attention to.
Yeah, brilliant. Well, mate, we've just ticked on 20 minutes. It's been just a nice short, sharp wrap up. For those that want the deeper charts, Checkmate is working over at Glassnode. You're the head on chain, right? You're the big dog. So head over to Glassnode if you want those charts. Checkmate also does 3 analysis posts for us a week. So if you want the breakdown, basically what we did in this video 3 times a week, you can head over to Collective Shift. It's $1 for 7 days. The starter membership will get you right. And yeah, man, I think that's probably it. That's it. What are you doing for Christmas, man? Were you taking some time off or?
Mate,
Yeah.
I'm going to be hanging out at the beach and getting kite surfing is my addiction. So
Okay.
finally, I'm back near the beach. I've got my gear. I bought some new equipment, and I'll be taking it out for a belt as often as I can.
Brilliant, mate. Well, I won't be doing that, but I'm going to come up and see you next week. Have a great beer. You won't see me in
Looking
the
forward
water.
to it.
Awesome, man. Thanks for your time.
Happy days, mate. Cheers.
See you, man.